as I can. Meeting is now streaming live on YouTube. Fantastic. All right, guys. Y'all know me, but if anybody decides to watch this YouTube, probably should have something better to do on their day. But yeah, it is streaming live on YouTube. How about that? I'm not very good with this technology stuff, so I'm trying though. Tony, loan officer, branch manager, American Pacific Mortgage. Eddie Covarrubias, the dude in the bananas, um, loan officer, also one of my assistants, and young aspiring loan officer. Everybody else interns with Kim and Associates. It's gonna be fun, guys. All right, so last time we kind of just give a brief overview of loans, and our team is veteran owned, right? I'm not a veteran, but Kim, Chris, James Pitts, and a plethora of other people, and I believe a couple of people on this call, including Marcus, I think Noel, and Berto, all veterans. And so one of the things I want to talk about is one of the items that we specialize in. One of the products is veteran home loans, right? There's some groups that specialize just in VA lending, and VA lending is very tricky. But we've devised a system that makes it very easy and beneficial to veterans. We've gotten some extremely tough deals uh, across the finish line. Eddie and I just closed a deal where multiple people had denied him. He had a 600 FICO. Oh, no, I was not a veteran. No, why did I think you were a veteran? I think at the meeting there was a reference to
My
like you
brother.
being in the barracks.
My brother is.
Your
Oh
brother
yeah.
is.
Yeah, you don't have
Oh,
to be in the military to go to the barracks.
oh, okay. I didn't know that.
Also, I was
It was.
now I'm gonna get painted in a real bad light.
Oh
There's a
no.
there's a thing at one time called the barracks bunnies, and that's what we were referencing. But I was not that.
Nice.
And I am not a
Follow up
veteran.
question: what is a barrack bunny? I'm gonna turn to Berto on that. Berto, what does that mean?
Berto, you take that away.
Let's. It's like a very special woman who visits a lot of the males at the barracks at night.
Oh, nice. What do they do?
Um, Serve their country.
Serve their country? Well, well, listen. Hey, God bless America and those women. Yeah. Hey, Eddie, that's God bless America 2021. You're still allowed to say that. You know, we believe in God's guns and freedom of speech here. And that's a part of freedom, bro. If these beautiful women want to go service their country, then who are we to judge them? Some would say they're doing the Lord's work. I'm just kidding, guys. Probably the banker. You don't want to hear the banker say that, huh? No, we kid. We have fun on our team, and it's all great. All right, I'm going to share my screen, guys. I'm going to talk about a little bit of. We actually have this great flyer and talk about some of the myths and some of the concepts behind VA lending, and I'll give a brief overview of what we're doing. Recently, I was asked one of my quotes, and something that my mentor taught me is comparing a regular home loan to a VA loan, right? And I want to be very clear about this and how I say this, right? A consumer has to show us and prove to us a strong and sound financial portfolio to earn the right to get a home loan. A veteran, the guidelines are written so that it makes it so that it can be their right, and it makes it attainable. Not to say that every veteran is going to qualify for the veteran loan, but they're underwritten in a manner that is more favorably than a consumer loan. A VA loan, because of some of the parameters and how it's set, it gives them the opportunity to be able to reach financing, where on the consumer side, it would be a tough go. Right. And so as I share my screen, so let's talk about what what we're looking at, right? The myths and facts, and we'll go through these real quick. The first part of it is giving a little background on what a VA loan and some of the benefits that a VA loan incurs. A VA loan is zero down, right? One of the big misconceptions on a VA loan, and this isn't on here, the closing cost can be wrapped into the loan. So an example would be we're buying a $500,000 home, closing costs are $10,000, and the idea is that you can now get a loan for $510,000. Now, the short answer to can that happen is no. You cannot wrap closing costs into the loan. Now, you'll hear a lot of lenders say something like, I can cover your VA closing costs, or we can get your VA closing costs added to your loan. There is one strategy to add it to the loan. That would be if the property appraises, same example, 500,000. Let's just say the property appraises for 510,000. You can try to negotiate with the sellers to say, we're going to raise the purchase price to 510,000, and you're going to give us a $10,000 credit. So you're not necessarily wrapping the closing costs into the loan. What you're doing is you're adjusting the figures, right? So that you're not paying those 10,000 out of pocket. You're finding a creative way to get around that. The other part is the lender giving credit to the buyer. So I have a veteran, he actually works for the VA. I kid you not, I literally cried. Now it might be because I'm overweight and I probably produce a lot of estrogen, because fat guys do that. In case you didn't know, that's science. Science, I think it's offensive now. Well, we'll figure it out. I might get canceled. Imagine I get canceled after 2 shows. Wow, that would suck. I didn't even get a producer and I got canceled. Anyways, veteran calls, says, hey, I work for the VA. You know, he had low credit and he has no money. But his credit score qualified him for the loan, right? So what I was able to do is just raise his interest rate a tad bit because he can afford the monthly payments. But what he didn't have was he didn't have money up front. He didn't have money up front because his spouse had just passed away. And so he had taken a year of grievance leave. And so he was just getting back on his feet and trying to get his life restarted. This man was almost 60 years old, never bought a home. And I said, well, let's get you a home because it's like you deserve this. So I took a reduced comp and I was able to credit him almost $10,000 for his closing costs. Now the dude is getting a brand new build that's like $430,000, and he's paying like $1,000 out of pocket total to get this house, right? So again, what I was able to do in order to offset closing costs was not add them to the loan balance, but raise his interest rate just a little bit. His payment went up about $100 every month, but now he didn't have to pay closing costs. All right. If you guys want some more clarity on how I did both of those strategies, just let me know at the end and we'll go in depth. Now, a VA loan is 0 down. Now, when you're buying a traditional home, if you don't have 20% down, you're going to pay something called mortgage insurance. Mortgage insurance is the cost of doing business when you just don't have the money. What the lenders are saying is, hey, we're going to let you borrow money to 96.5% loan to value or 97% loan to value. But if we have to, and this is from the dudes above me, right, that are coming up with these ideas on how they can lend money to people who don't have a down payment, they're saying, okay, well, it's going to cost us, you know, X amount to probably foreclose on it. So we got to insure our money. We got to ensure that if something goes wrong, we're going to recoup any losses that we could potentially take. So they add in mortgage insurance. And so the mortgage insurance is in place to protect the lender from a default and them having to go after the property, foreclose, and them losing a ton of money. It's great because it allows you to get into a home, right? But there's an additional cost. For reference, I pay mortgage insurance on my home, right? Because I didn't want to spend a ton of money up front. On the veteran side, there is no mortgage insurance. Instead, what they have is they have something called a funding fee. Okay. A funding fee is an upfront fee that gets added to the loan balance. The funding fee right now for first-time use is 2.3% of the loan amount, right? So if you're doing a $500,000 purchase, the final loan amount, if the veteran is not exempt from the funding fee, is going to be $511,500. I did that in my head, Eddie. So, Eddie, verify that. 500,000 plus 2.3%. Okay. So what'll happen is that'll get added to the loan balance. Now, if the veteran is disabled 25% or more, okay, if the veteran is disabled 25% or more, then they don't have to pay the funding fee. They are exempt from it. That was right? Nice. All right. For reference, about 11 G's on your monthly mortgage is probably about $60 in their monthly payment. So if their monthly payment was going to be $2,700, their payment would go up to like $2,760, right? That's a rough number. That's not an exact number. Timelines, right? This is starting to get, this myth here is starting to kind of go away, right? VA loans have a lot of red tape and take longer to close. Now, I just said in the beginning that VA loans are underwritten in a manner that makes it more favorable for the veteran to get qualified. In my opinion, because I'm really good at financing VA loans are the easiest loans to get across the finish line. And before COVID took over the world, I could do a VA loan easily in 21 days. I just know them like the back of my hand. And there's certain lenders out there that we just know them. And so we're able to get them quick. One of the things that a timeline can be affected by is an appraisal. With the VA, it's minimum 10-day turn times on the VA appraisals. So what we've done to mitigate, right, that 10-day wait period is we order it on day 1. I had a VA appraisal recently come in at about day 11. And that was my contingency timeline. I had 11 days and I met it. We're going to close that bad boy here next week too. Foreclosures and VA loans. I can't get another VA home loan because I lost my entitlement in a foreclosure. So there's just a seasoning period, right? I don't know the exact years for a seasoning period, but if you lost your VA loan to a foreclosure, you can try to reestablish your entitlement, right? You just have to wait a few years. And I don't know specifically if there are items that you have to talk with the VA about, but I can do more research on it. And if you run into the situation, we can definitely talk about what happened in the foreclosure and see how we can get you your entitlement back. What entitlement is the VA is essentially saying, hey, you have the ability to acquire a VA home loan. So when you get a certificate of eligibility, a person who's never used it is going to see a $36,000 entitlement, right? There's a specific formula we use to extrapolate how much coverage they're going to get. But for a veteran that has a $36,000 entitlement, they can get a VA loan with no loan limit. So whatever they qualify for, you can literally go buy a $2 million home with zero down. Which leads me into the next part, which is jumbo financing. There's no jumbo financing. Jumbo is a loan that is over the county limit, right? So for Riverside County, where we're in, that would be any loan over $548,000. For LA County, it would be any loan over $823,000, right? Typical VA financing is a little bit more restrictive, 20% down. It's a little tougher. With VA, there's no loan limit. So I've done multiple $1 million loans with zero down. Think about the power that enables the veteran to have. If they have a great paying job, they can still get their home with zero down and go up to 1.5 million if they so want. Go down to Carlsbad and get a beachfront property. That's a pretty awesome opportunity. Multiple VA loans. You can only use your VA loan benefit once, but you can't purchase a second home with a VA loan if you already own a home. So you can use your VA benefits multiple times. Okay. If you have a VA loan that's utilized right now, there's a formula we lenders use to figure out how much entitlement you have left and how much more of a second home you can buy. Typically, it's going to require a down payment. An example I could give is I did a gentleman who has a home. There's probably about 150,000 left on the mortgage. He wanted a $600,000 home, wanted to use his VA. He had to come in with almost 11% down to use his VA home loan again. Now, why did we do that and not go conventional? This veteran was exempt from the funding fee, and therefore he didn't have to pay mortgage insurance. So his VA home loan was the best option. What he also could have done was he could have refinanced that first home into a conventional loan. It would have freed up his full entitlement, and then he could have used the zero down benefit again, because he would have had full entitlement going forward on his next property. Okay, that's a little bit, there's a few more puzzle pieces being moved there. In my opinion, that's sometimes a better option for the veteran. VA loan cost the buyer and seller more money. It definitely doesn't cost the buyer more money, because VA has limits on certain fees that we can have. They're called non-allowables. So typically, closing costs tend to be a little bit lower on VA loans. Also, it doesn't cost the seller more money. One of the things that the seller will incur on a VA loan is they have to have termite clearance. But for the most part, every home should have termite clearance written into their contract, right? The chaoticness of this industry right now, you're waiving termite on most deals, but for the most part, should always have termite as a part of the contract. Finally, active duty. The VA home loan benefit is only for those who have served and are out of the military. So that's not true. So if you were in the reserves for 6 years, okay, if you were in the reserves for 6 years, you can still acquire a home loan. If you were in the military for 90 days and were honorably discharged, you may still get some entitlement or have the opportunity to get your VA loan. Typically, with a case like that, their certificate of eligibility won't auto-populate, and we'll have to work with the VA to get that established. All right. One thing I would say is, when you're on the phones, right, and you have a veteran on the line, let's give them a shot every time, right? Regardless of their situation, let's try to give them a shot, because they deserve that shot. And I'm willing to grind as hard as I can to make that loan work, right? There are things that I'm able to do on VA loans that a lot of lenders just don't know. One thing that's missing on this flyer is, on government loans, you always have to count the spouse's debts. But on VA loans, there's actually a regulation where if you can prove that the spouse can cover their own debts, you don't have to include the spouse, right? Him or her. So if the veteran, and because it's 2021, if the veteran is a female and the spouse is a person, I guess I can't is generalize a word, Eddie? No? Okay. So if you have person A and they're the veteran, and person B and they're not a veteran, and person B has dicey credit and has a bunch of debt, and they're messing up the opportunity for the veteran to buy a home, then what we can do is have person B get a real job with a W-2 income. I'm specifically talking to somebody. Sorry, guys. That's why I'm going into very specifics. And have person B get a job, and then we don't have to count person B's debts against the veteran. And so then the veteran can get a home worth around $500,000. So that's actually a regulation that not all lenders know. And I just learned this probably about a year ago, because I have amazing underwriting partners, and I was able to get with an underwriter, and she actually sat with me for an hour and taught me the kind of just how to tweak a home loan, a VA home loan, to make it qualifiable. I'm gonna stop the share, guys. We as a team kind of built our marketing around helping veterans, and we want to make sure that we do right by them, and they deserve it. They sacrifice themselves for our country, and so we want to make sure we do right by them when we get them this home. So if you have any questions, reach out. I'm going to stop the recording because I want to be more fun. So how do I do this?